Hi Dreamers, the other day I tweeted about ULTY, where I simply said, take a look at the ULTY price momentum. Thoughts? With this particular chart. And I was really surprised at how many people interacted and basically said, yeah, it looks good to me. It's a buy. And yeah, they've made a lot of changes. So I thought I'd dedicate this quick episode to what's going on with ULTY and pack into this episode broader learnings on how to evaluate and take a look at some of these income ETFs so that you can decipher on your own whether or not you want to invest in these ultra high income ETF types. So let's take a look at ULTY. So I'll first start in my Seeking Alpha tool, which is my favorite financial research tool, aside from my brokerage. And what we know is that this ETF was launched in February of 2024. And we can see that the price return has been a negative 68% since launch. And if we change the metric on that to the total return, we can see the total return since launch is just about 13%, which is slightly above the S&P 500. But a lot of folks are pointing out that a big change happened since April. And they point out this chart. So if we look at just April 2025 to today, which is not a large period of time, you can see the total return is more like 30% as compared to the 11% of the S&P. So far so good. But let's zoom out at that 1 year chart again, and I'll talk it through as I see it. So obviously since July of 2024, we see considerable NAV erosion all the way until April of 2025, where we see this flattening effect, and it stays in the $6 range, which might make some folks think, okay, this stock has found its bottom. But take a look at the volume numbers underneath here, and you can see a dramatic increase in the assets under management as people just throw their money into this fund, to the point where assets under management have grown to a pretty high level. What's interesting about that is that typically when a stock experiences increased buying volume, which this fund has to an extraordinary extent, you would expect that the price generally goes up. But you see, we're not seeing that. Even with these astronomical inflows, the price is staying the same. And the biggest inflows have happened just in July 2025, so very recently, with almost no change in the price. So that's one of the first red flags that you should be looking for. So it's useful to actually look at just stock price when thinking about that dynamic. But Dream, what about this return? Since April, they must be doing something right. So let's think through that lens. So I first wanted to remind you what happened in April of 2025. And basically this is what happened. You remember that there was an extreme trough right at the beginning of April. And since then, we've experienced a tremendous rally in the NASDAQ and in the S&P. So with that backdrop, let's take a look at this fund. And I'm going right to the source. So it says ULTY is an actively managed ETF that seeks to generate monthly income from a portfolio of covered call strategies. And it points out that investing in this fund involves a high degree of risk, and that due to their investment strategy, their indirect exposure to gains of the share price returns of the underlying securities is capped. However, ULTY is subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by the income received. And guys, that's pretty much it for what they say this fund does. The other thing that I think was very interesting was this right here, a 30-day SEC yield of 0. Now, what does that mean exactly? Well, you can see a little line right here that the most recent distribution on 6/25/25 contained 100% return of capital and 0% income, 100% return of capital, and 0% income. Now, what does that mean? So far we've learned that the price returns are going to be capped, but that the fund is subject to all potential losses if the shares decrease in value, and that the most recent distribution was 100% return of capital. Okay, so let's unpack this, and for that I'm going to scroll all the way down to where it starts to show the holdings. And you can see that there's this intraday trades, which tells you that they are making lots of moves throughout the day. And then a download of all current holdings. So if we click on this and we start to zoom in, we can see all the specific holdings and options that they're playing. So the first one is AAOI, or Applied Optoelectronics. You can see how many shares they have and what the current price is. For example, $28.98. And then here's some of the options. So for example, a $31 call and a $24 put, which you can start to see a pretty tight range. So they have APP, which is AppLovin, and you can see the price here is $355 with a call of $347 and another one at $362. And then they have a put at $300 and another put at $325. And so you can start to see how aggressive they're being with the calls and the puts, essentially creating a call ladder and a put ladder on every single position that are often at the money or out of the money. And if you're unfamiliar with those two terms, I have dedicated videos on both of those subjects. And you can see some of their other holdings here: ASTS, Coin, First Solar, Hood, Mara, and even leveraged tickers like this Drexion Daily Biotech Bull 3X shares. And those are extremely volatile, but have high premiums. So you can see this one is at $66 currently, and they've got a call at $68, which is super tight, and a put at $54, and so on and so forth. One of the things you might notice here is that the tickers themselves are very volatile. And so essentially, they've assembled some of the most volatile tickers out there. And don't forget, a lot of these have had a very nice run since April. The other thing we can do on their page is just download the prospectus, which brings us to something like this, where we can actually see their strategy. And one of the things I picked up on right away is that most of the time in prospectus, they have the rules of the road and what guardrails there are in terms of limitations on the risk that they will take with your money. But in this perspective, it says that the advisor selects the underlying securities by analyzing the levels of implied volatility, and that the implied volatility is integral to the fund's strategy, as it indicates the expected fluctuations of the security. And with the higher volatility, typically comes higher increased options premiums. And folks, that's pretty much it. They're basically saying we are going to pick the most volatile stocks out there, and we're going to be changing that up every single week. So at any given time, you really wouldn't know what tickers they are holding and playing in any given month. Now, how do you feel about that as an investor playing with your money? The other thing just to point out here is that they have a very high expense ratio. So they're taking a good portion of the money you're giving them to pocket it. So what do other analysts say about this? Well, going into Seeking Alpha, in this particular article, this author talks about the fact that the ETF has had chronic bleeding partly due to its cost ratio of over 1%. And of course, the regular high dividend distribution. And I think this is a good call out here, which is really thinking about the daily RSI of the holdings that you see anytime you download that spreadsheet, which, as I mentioned, will change very often. So you're going to have to keep your finger on the pulse of this all the time. And you can see that the daily RSIs are very high, with many above 60, above 70, or even above 80. Another analyst talks about the fact that there's just so many what ifs, that the main risk is capital erosion. And I agree with this point given the fact that a lot of the holdings have had an exceptional run starting in April and are currently at very high RSIs. And the other thing that I've pointed out in other videos is that typically when you have an at-the-money option strategy, it tends to underperform other derivative ETFs that allow you to capture some of that upside, which, now we've looked at the holdings, we better understand that because of their option strategy, they're unable to capture the upside because they've capped it with at-the-money calls. But if the stock starts to go down, or we have a sudden downturn in the market, on the other side, the shareholder is subject to all potential losses. So since April, everything's been going up, and we haven't noticed that yet. Another analyst had this article about ULTY being the gambler's income ETF. And why does he say that? Well, one of the things this article points out is not only what we noticed, in that the options are a massive web of options contracts that have both long and short calls and puts. And so they're trying to squeeze value out in every single way. But even while they're doing this, he took a look at the last few distributions. And I took a look. It's actually really hard. You have to dig deep to find this information. And there's also a month delay of this release. But essentially, this shows the payout on May 9th of 2025, where it's saying that 100% of the distribution on May 9th was return of capital, and that 0% was income. And then look at this, on May 16th, 2025, 100% was return of capital, and 0% was income. And then look at this, May 23rd, 2025, 100% return of capital, and 0% income. Same thing on May 30th. And of course, we noticed when we went to their website that this said the same thing, that the most recent distribution on 6/25 was 100% return of capital and 0% income. Well, what that says to me is that these folks putting their money in July, their money is being paid out to the rest of the folks because none of the distribution was from income generated. And so if I was looking for a job, I might love to be the manager of this particular ETF because I would have $1 billion to play with in options. And I would just be putting options on everything that's volatile. I would be banking 1.4% of all of those fees, not making any income, and just taking the new money coming in to distribute to everyone. And then crossing my fingers and hoping that all of those super volatile, super overbought stocks continue to go up. And speaking of that, who is the manager? Well, it's actually really hard to find. And so if you Google it, who manages ULTY, you'll see a company, Tidal Investments LLC, which is quite different from some of the other ETFs that have a person's photo, name, background, and bio, so that you can decide if that manager has the right experience to manage the options and your money. And so I'll end with this article and then summarize. The folks who are a fan of this ETF will say, listen, there is a staggering 85% distribution rate. And they'll say, for them, that kind of reward is worth the risk. Because if the stock price was $6.34 and you got on average 9 cents a week, that means in 70 weeks, or just over a year and a third, you would get all of your money back just in the dividend. Okay, but that assumes that there won't be a market correction, that the fund will continue to attract more and more investors in order to pay out that staggering distribution rate. Because as I've pointed out already, the distribution of 100% return on capital over and over and over means that investors are receiving a portion of their own principal rather than income from the fund's investment. And that over time, that practice will chip away at the fund's NAV. And eventually what can happen is a reverse split where the number of shares that you hold consolidate. And again, in a sideways or slightly rising market with the holdings they have, the strategy might work. But in a sustained downturn or a quick one, this could lead to significant losses. And so in summary, I would say this. It's a high risk, high expense investment where the holdings are constantly changing and on the move. The new folks that are putting money in are essentially giving money back to previous folks who have held the fund. The fund has very few rules. And so if you are putting your money in, you're essentially letting the manager, who you do not know, do whatever they want with your money. And so the way I look at ULTY is almost like a weekly roulette table, because every single week you're putting whatever money you put into ULTY and saying, I'm going to put it all on red number 7. And week by week, you hope that you have a winning streak. Because if you have a series of losing streaks on red number 7, that's when this fund is going to drain very quickly. And so if you are a gambler, and this is just fun money, I can understand it for entertainment purposes. And I considered buying a little bit just for illustrative purposes. But at the end of the day, this is the kind of fund that a real investor would never touch. And so hopefully that was helpful for you as you continue to navigate all of the different derivative options ETFs that are coming out. And as always, I'd love to know what you think in the comments. Well, that's it for today. I hope you enjoyed this dividend income update. And if you want a richer, real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want, no pressure. As always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.